Very good morning, good afternoon, and good evening to all. Myself, Vaibhav. I welcome all of you to today's session of Visual JForex, in which we are going to see how we can use to design and develop the algorithm for profitable trading using the indicator Fibonacci pivot series. This is the second part, and in today's session, the focus is going to be completing the setup which we had started to build in the last session. And so far, the development includes this instrument subscription where the Euro USD is being used as the instrument of choice. Afterwards, this Fibonacci pivot indicator block was added and to look at the price volatility and also to determine some entry conditions. We are taking the help of these get historical candle blocks with a varying candle period 1, 2, 4, and 24 respectively. To then pinpoint the exact entry point, these 10-second candle blocks will also be utilized. I will give you a refresher of sort of what the logic is for the construction of the algorithm for trading purposes. We have this chart which I will change to Euro USD, and I have already plotted this Fibonacci pivot. The logic is quite simple. For any buy trade to take place, we want the reversal of sort to take place after some correction has already happened, and along with the correction, we are also relying on the consolidation of at least a day. So the requirement is that we need the last hourly candle to be closing on the higher side above the first support S1, but prior to that the penultimate candle should have closed on the lower side, and we are not really seeing that kind of condition shaping up here. So I will go back in time, and something like this should suffice for our purpose. So here we have this condition where we have the last hourly candle closing on the higher side, and the hourly candle just prior to that is closing on the lower side compared to the S1. And along with this, we also want to make sure that the hourly candle close 24 hours back, that is 1 day back, was also below the S1. So that ensures that there was consolidation, and only after due consolidation the underlying instrument is trying to rise again, and this might be the time to get involved for a new trade. And here, suppose if we take into consideration this hourly candle, we have this closing level on the higher side. So here the trade can be initiated provided 24 hours back, that is 7 GMT of 6th January, we had this hourly candle close below this S1. So I think this is the place where the conditions are being fulfilled. So here the buy trade will take place, and it goes on to rise to almost 1.1319 from 1.1306. And here, as I said last time around, also we are going to make the use of difference between the price volatility, that is difference between two hourly candle levels with the time interval of 4 hours. Suppose if this is the last hourly candle close on the higher side, we will take the shift value of 4, that is the candle which had closed 4 hours back. So here this is 1, 2, 3, 4, and we will use the lowest point of this hourly candle, the candle low, as 1 point, and the closing level of the last hourly candle as the second point. We will calculate the difference between the two, and that will be our stop loss for this trade, and twice of it will be the target price. So I think if I'm right, as per back of the envelope calculation, the difference is somewhere close to 7 to 8 pips, not precise, and that makes our target price. Suppose if the difference is 7 pips, the target will be 14 pips. So somewhere close to this point, our target will be. So that's how this system is going to work. And next time around, here the same condition plays out, and here also the difference will have to be calculated, and the closing level with the shift value of 4 hours back, the difference will have to take. But one thing which we will add later on also, that the closing level of the candle which had closed 4 hours back should also be below this first support, so as to avoid this kind of situation where we have the price continuing to decline on the lower side and then reversing sharply. So this will not play out, and we will have the conditions only similar to this, where the trade execution will take place after due consolidation. Price starts to rise again, and that's when we want to get involved. Okay, so this is the logic for the execution of the buy trade. And now we have to go back to the Visual JForex board, which has been developed by the Dukascopy Bank SA. And we have this setup which we have to now take forward with adding the required blocks. And we start where we left last time, and first thing we will do is get the calculation in place between the closing value of the last hourly candle, which is candle 18, and the candle which had closed 4 hours back, candle 20. Okay, so we start with the calculation first. For that we are going to use the calculation expression. All right, candle 18, candle close will of course be higher compared to the lowest point of candle 20, as we are going to also add the condition that the candle 20 candle close needs to have been less than the S1, whereas the candle 18 candle close will need to have been higher than the S1. Okay, so we take candle 20 candle low, and this will be A1 minus A2 minus A2. Okay, hourly candle difference, and to convert it into integer data type, we also need to multiply it with the pip conversion factor, since we are dealing with the Euro USD, which has its pip values with 4 decimal points. I will have to multiply this difference with 10 raised to the power 4, that is 10,000. So I create a new variable. It will have the value of 10,000. Okay, A1 into A2, and this output value result we will not define just yet. Once we get in the command block, trade command block, at that point in time we will define this variable, just to make sure that the data type is as per the requirement of the trade command block. Okay, so we leave it as it is for the time being, and we start to define the conditions using the if block for the execution of the buy trade. So I have to take logical components. Multiple action comes first, which will be placed on the lower side. And now I take a couple of if blocks. Even at this point, I am not sure how many of these we are going to need. We will just add as per the necessity of the condition. And the first thing first, we have to consider the first support, that is S11 support 114, and this is going to be our second input. And we will compare it to the closing values of hourly candles with the varying shift value. Okay, we need the last hourly candle close to be greater than the support 114. So I take candle 18 candle close, and here I will join it first input greater than second input, whereas the candle 19 which closed 2 hours back, it should have its closing value on the lower side. So I take candle 19 candle close, and it should be first input less than second input. First input greater than second input, and in this case first input less than second input. And same thing needs to be true for candle 21 candle close also. Its closing value will also need to have been less than supports 114. Okay, we take this candle 21 candle close, and this will be first input less than second input. Candle 19 candle 21, both these candles have their closing values less than the S1 level. We also need to make sure that the similar is the case with this hourly candle 20 with the shift value, that is the look back period of 4. So again we have to take supports 114, which is the first support of the Fibonacci pivot series of weekly candle period, and compare it to the candle 20 candle closing level. All right, and after that we take two more of this. First input less than second input. Now the trade will be initiated as and when we have the price starting to climb above the closing value of the last hour. So that essentially means we have to take into consideration the candle 22nd and candle 23rd closing levels and compare it to the candle 18 candle close. Alright, we take candle 18 candle close as the common input in both of these blocks, and along with that we take candle 22nd and candle 23rd close. Candle 23rd candle close needs to have been less, so first input less than second input. while candle 22nd, which has the look back period of 1, it should close higher. We will need candle 22nd candle close to be greater than candle 18 candle close, and after that we can bring in the trade command block. Let me arrange this, which will take few seconds. And we take trade command block, open at market. That means we will be relying on the system of initiating trade at the current market price. And here first input greater than second input. Now we have to define various input parameters for this trade command block, depending on which our order configuration will be set. Okay, this is going to be a buy order. Default investment remains as it is. Trade amount I will change to 0.1 million. Slippage, 2 pips slippage is good enough. Stop loss, we had defined the value for this parameter, but we had left it out last time around when we were doing calculation. Now this is the right time to create a new variable. Okay, stop loss of buy side, so I have named it SLB, and its value will be derived from this calculation out expressions output value. Take profit, in this case also we have to define a new variable. I will name it EPB, and it is going to be simply twice of the stop loss. So all we need to do is take one more mathematical component. Here it is. And multiply it with 2. Okay, so this is going to be A1 into A2, and this output value will be assigned to this variable target price. Alright, so we have completed the defining of the various variables for the trade command block, and that means our buy side is ready. Okay, so here in this session we have completed the buy side, where we added the requirements for the execution of the trade revolving around the logic of going for a correction and then consolidation in the underlying instrument. And when we see that the first support level of the Fibonacci pivot series of this week is providing excellent support, and that the consolidation has happened for more than a day, and now we are seeing again the price reverting on the higher side, we think that this is the right time to get involved for a new trade, and that's when this algorithm will initiate the trade command for a buy trade with the predefined variables as per our assessment of the situation. So that's how there is a logical formation been defined. I hope you have been able to understand the logical as well as the execution part of this algorithm. And I'm hopeful you will be trying it out on your own. And in subsequent session, we will be dealing with the sell side of this algorithm. So do come back next time around. We are also available on the Facebook. Do reach out to us there if you want to join in for any discussion related to the market developments. For further coverage on the various research and analytical situations in the financial derivative market, we have a lot of material on our analytics page, the Dukascopy analytics page, for which the link has been provided. And also you will need the JForex platform to test this algorithmic setup on the historical data. So do check it out. All the links are there in the bio. Thank you all for joining in. See you next time around. Till then, goodbye.